Hey everybody, Brian Shannon here from AlphaTrends.net. It's Friday, the 22nd of July, 2016, and the market continues to defy the skeptics who fight it. I'm sure I will get comments once again this week telling me that next week the market will be lower, as I did the last 2 weeks. But here we are, two-thirds of a percent higher in the S&P. Nasdaq up more than 1.5%, and the semiconductors roared ahead. They've been the strongest group lately, and they continue to lead. The biotechs bounced another 3%. Oil dropped. Bonds were up. Let's take a look at the action here on the charts. The S&P 500, as we know, is out at all-time highs here and showing no signs that the sellers are taking any control. We've had this rising 5-day moving average, and as I've repeatedly pointed out, that markets often correct not just price-wise, but through time. And as long as we had held above this level and not made a pattern of lower highs and lower lows below a flat to declining 5-day moving average, that we would continue to give the benefit of the doubt to the buyers. We are innocent till proven guilty. Path of least resistance is higher. However you want to say it, prices are moving up, and it's just foolish to try to short it for anything more than quick day trades while we have these conditions that exist. That is above a rising 10, 20, 50-day moving average, a 50, 100, and 200-day moving average heading higher. Those are indications that the buyers are in control, and not even an intermediate term level has been broken here. It did look like on Thursday that we had the possibility, and I had warned subscribers that we have to be careful of the possibility that from a failed breakout could come a fast move lower, but we weren't going to get short until we saw the 5-day moving average act as resistance and then begin to turn lower. If that happened, then we might have sold short here with a stop just above that level. Instead, of course, the buyers regain control once again here today. And for the week, here's our volume weighted average price right at that 5-day moving average. And it's not always the case that those two will come together because you can have a big volume skew at a different point. Anyways, next week, 215.5 is going to be our most important intermediate term level to hold over the first couple days of the week, and then we'll see how things develop from there. Ideally, if we see some weakness, the best case scenario would be for it to come back down towards 216.5 and then build some energy for a continuation higher. But the fact is, the path of least resistance remains higher. Same is true in the Nasdaq, of course. The Nasdaq broke beyond this high from earlier on Monday, that is, and then pulled back. We held above that rising 5-day moving average, and here we are closing pretty much near the highs for the week. The volume weighted average price in the Nasdaq right down there at 113. So, that 113 level is going to be our first important area. Really, I'd say 112.70 to 113. If we hold above that, we'll continue to give the benefit of the doubt to the buyers in the intermediate term time frame. And on the daily time frame, of course, we are getting a little bit extended here, but extended doesn't mean that the market has to go down. Markets can correct sideways by absorbing new supply in and having strong bidders under the market. But this market isn't even doing that. This market is making higher highs and higher lows. So when we look at the weekly time frame, it's quite possible that we are headed towards new highs for since this recovery. The Russell 2000 is not finding any real resistance at this prior important area, and that's on the weekly time frame. On the daily time frame, we can see that what's happening. We're correcting through time. The market is turning sideways. What most people, or what a lot of people seem to be looking for, is for a price pullback. And when that doesn't happen and people get short, they give up in frustration, they cover, and they don't look to the market the correct way, which is only price pays. Look at what the market is telling you. When the market comes down towards support, you're absolutely correct in becoming near-term cautious. But what we're looking for is, if this Russell was to fail, would have been something like this, and maybe even like this, and then for it to break. Instead, we saw that support at 119 held. That will continue to be a very important level over the intermediate term, and this market is still pushing higher here on this this daily time frame, we are holding up above this prior little band of resistance. So that resistance is becoming support, and it appears as though this market should continue to move higher. Just know where your stops are, and if you're looking to be short because you can't believe what you see, as I like to remind people, one of my favorite market quotes, I don't know who originally said it, is it's better to be on the sidelines in cash wishing that you were in the market than it is to be in the market incorrectly positioned and wishing that you were out. And if I was short, I would certainly wish that I was out of this market because it is not working. This has been a little bit of a band of resistance this week, so we'll want to see that if it can get above and then hold above there with conviction. I know it is above there now, but I'm saying hold above there with some conviction. Semiconductors, again, this is the group that people have been pointing to, saying they're up too much because it keeps gapping up, and they keep looking to short it on every little down day. But with this rising 5-day moving average, the market is innocent till proven guilty. It is up at high, on a weekly basis at highs not seen since way back, since almost when they came public back in 2000. So this market is continuing to push higher and shows that it's providing leadership for the rest of the market. That is the Nasdaq. Here's the volume weighted average price for the week, and you can see that the buyers gain control. On Thursday, we had a slight pullback here, but where was that pullback halted? Right at this prior band of support in here, and right at that rising 5-day moving average. You've got no business shorting a market above a rising 5-day moving average for anything longer than a quick day trade. If the market breaks down below this level and then starts to show a pattern of lower highs and lower lows and the 5-day moving average turns lower, then if you're an aggressive trader, you can sell short. But again, the longer term trend is still higher. It's innocent till proven guilty. Why not make life easier and just trade with the trend? Shares of the biotechs broke beyond that little band of resistance that we had spoken about near 274. And now it looks like they're continuing up towards the high end of this range that we had seen. This group is back above and holding above for the last week and a half the volume weighted average price since the beginning of the year, which is this purple line right here. So that's good to see that it's holding its support, and that's kind of right near that rising 50-day moving average right now too. So it continues to look like this should be heading up towards about 285-ish. The question is, how do you get involved? What's the most comfortable level for you? That's what I'm going to talk about with subscribers in the Monday webinar this Monday coming up, and we'll talk about different time frames and whatever stocks and markets that subscribers want to talk about. That's what we do in each webinar. Apple this week did pull back a little bit. If you see, here's the volume weighted average price year to date. And what did we see? Well, we've seen this pattern of higher highs and higher lows above this rising 5-day moving average. And this week it broke. It broke support at this level right here, right where that 5-day moving average is. And now we're below the flat to declining 5-day moving average. We're below the volume weighted average priced for the week. So it looks like it's in pullback mode. It's in corrective mode. And it wouldn't surprise me at all to see Apple pull back down towards that 50-day moving average near 96.5 to 97. If that type of thing doesn't concern you, then then you've got a different time frame. But for intermediate term traders, the shift occurred this week. The sellers regained control. It's going to need to get back up above this 99.75 to 100 level for it to be back on track for upside. And it's had a great run. There's nothing wrong with some simple digestion. If we take a look at the Fibonacci off those recent lows, 50%, a pullback of 50% of this most recent range, that would bring us right down into that 50-day moving average. So another reason to think that that's a realistic and reasonable place to look for this market to potentially head down towards. I wanted to point out Alibaba because this one's been interesting since it came public with the volume weighted average price. The stock came public here, and that's why I have that anchored volume weighted average price. It fell short of that VWAP on these last rallies, and here we are up to that volume weighted average price since the stock came public. If we drill down a little bit deeper here, you can see that answer these two questions. Where has it come from? Well, it's just rallied from 72 bucks a share, 73 up to 84. So it's just rallied 11 points, or about, what would that be, about 8% or so, 9%. Anyways, the stock is had a nice run recently. Where does it have the potential to go before it's likely to encounter a source of supply which might offer resistance? Well, this has been a level of resistance. Certainly, traditional technical analysis would tell us here's potential for resistance. We don't know if it is resistance yet. So far, it's up towards that level, and it's just consolidated for a day. What else do we have here? Well, we also have the volume weighted average price since the stock came public. So that's another reason to think that it's potential for resistance in here. And then we're a little bit beyond a 38.2% retracement of the entire range. So that's not really as relevant, but it just pays to look at this and say, do you want to be buying Alibaba right now? Well, maybe it'll turn out to be the best trade of your life. But if you prefer to, look at it from a lower risk standpoint, I would say wait for it to pull back a little bit. Wait for us to get through some earnings cycle. Earnings. I don't know when they're due for Alibaba, but certainly earnings did not help a stock like Netflix this week. CMG, on the other hand, had a great response to earnings. The TLT, the bonds, they were, they're trying to stabilize here. They're still in an uptrend. They found some support at this prior resistance, and looking to the 15-minute time frame, what do we see happening here? Well, we had a break of the 5-day moving average. We had a rally up to the declining 5-day moving average, the declining 5-day moving average. Now that 5-day moving average is flattened out. So if bonds are to get back up above this level and hold above there, I think that with a stop just underneath that 5-day moving average, you could look for the potential that this, that the TLT could continue to move higher. That would be where the trends become aligned. Long term, we're in an uptrend. On the daily time frame, we're in an uptrend, and this is what would potentially get us to continue to move higher. Hope you had a good week this week, and I will talk to you again next week. Thank you.